Hey, good afternoon, everyone. It is 2:30. Let's just jump right in here and take a look at what happened in the markets today. Not a whole lot of new news, but and this won't be a real long video because not a whole lot has changed. So this is new crop soybeans. We did come down and challenge the top end of this red box. Now let me zoom out here so you can see that for perspective. The red box comes from a lot of chart support, a lot of stuff going on in that range. So what we wanted to see happen is this box to hold, and you can see we did that today. We popped down into it, reversed right back out, and did make a score a little reversal action. What we want to see to make this pattern much more powerful is a day tomorrow that closes above 1188 and 3/4 on the new crop beans. That would complete a 3 inside up, and then obviously above that we want to see it back up above 12. Who knows if that'll happen or not? Again, there's not a major catalyst that's out there, so who knows? But what we do see is price action that's pretty oversold. So for instance, if we look at stochastics, you can see the stochastics since the move break lower in January have been getting less oversold into the lower prices. That's a divergence, right? So now if we look at the RSI, you can see the same thing all the way through January, all the way until this morning's low. You have higher lows all the way across the RSI. You can count them 1, 2, 3 higher lows with subsequent with lower prices to go with it. Those are all divergence levels. Now, if we look at MACD, you can see the same thing. We had a big low histogram here. We've rallied up and we broke the top of it. We've been unable to make the MACD cross back below the zero line, which is in and of itself a divergence. So we liked this action with divergence action right on top of this big area of support that we had identified. Now, if it trades back below today's low, I don't think it really changes a whole lot because we're still inside that box. But you just never know when a low is going to come from, and this is what it would look like if it were going to be scored, like today. It's not perfect by any stretch of the imagination, but there's enough there that if it does reverse from here, we wouldn't be totally surprised. And what would be the fundamental reason why it would reverse? Well, there really isn't one other than the funds are record short or near a record short across the grain complex. A lot of the bad information that's out there has been known and has been known for quite some time, and we're just waiting on some sort of bullish catalyst. And a lot of times that won't show up until you have an up move anyway. So we could be there. I'm not willing to say yes, that's it, that is it, but it could be. We just don't know. We need to see more trade action and some follow through from there. But what we saw today, we liked. All right, now let's look at new crop corn. Kind of the same situation. New crop corn tied Friday's low, and then it did fully engulf Friday's trading full candle, which is a bullish engulfing day. If you look at the divergence levels here, we have the same setup. We have a diverging RSI, we have a diverging stochastic, and we also have a diverging force index and the diverging MACD. So all of our oscillators are diverging. Now, a lot of times consolidation favors continuation, right? So you have this big move down from 510. Now we have this consolidation pattern that's happening. So this very well may not be a low. We may need to go punch one more out and come test the 450 level or something. But typically you do that from a more overbought setup. And as we stand today, we just don't have that. So corn, I think, is 50-50 from here as to whether or not we're going to push down lower, or whether we're going to come test some higher levels. I think the market has really just been contained. You can see it here. This is the report day from last month. And that low on the report day at 476 has really pretty much contained price action on December corn, with the exception of just a few days and a few spikes below it. What we want to see is this come challenge the top end of that and see if it can't get up above it all the way up at 490. But so I don't think that we go to $6 or 650 or anything like that right away, or definitely not without a catalyst. But where we are trading, I wouldn't be a bit surprised to see us come test the upper end of this range here, and then we'll just have to see how it reacts when it gets there. But so nothing new on corn today. We're really tempted to run out and buy calls against this because it does have the feel to it like we're trying to find some sort of temporary bottom and then we're going to rally. We have not pulled the trigger on that, but we may at any time. And one of the things helping support that argument is wheat. So wheat has been trading sideways here for the last 1, 2, 3, 4, 5, 6, 7 days. It's trading kind of off of this reversal. It's trading right on and around both sides of our hedge line, but significantly it is trading right on the top side of this base channel, and it has yet to break down into it. Now what I really like about wheat is the proximity here to this low at 607 and really down to the $6 mark. So anything up above this base channel I'm going to view still as bullish because of the way this thing is set up and the way corn is set up. And you can see that here on RIC on stochastics. You have a nice divergence. We've come up. We are now trending back lower to mid-range. This is where buying would usually emerge. You can see that really clearly in the force index. So you have a nice spike high followed by a sell-off to below the zero line. This is the buy territory for where you'd want to make an entry here. So the risk reward is pretty nice against this low on January 29th. It's a nice risk reward above this downward sloping base channel or trend channel here. Both of those are speculative ideas and positions. They're not saying that that's a guaranteed result by any stretch, but it's a nice setup and a nice risk reward. So be patient with wheat there. I think that it actually bodes well for higher prices, and I think that will probably be a catalyst that brings corn along as well. And then if beans go, then I don't see any reason why all three of them wouldn't work higher too. So remember, when the news is the most bearish and everybody's on one side of the boat and you can't find anything bullish, that is absolutely when you need to be looking for a low to form. As Buffett would say, you've got to be greedy when others are fearful. And I think definitely right now, most everybody in this market is fearful of lower prices, and there's lots of reasons to be, right? Huge crops, bad demand. The forecast is great for our 2024 crop, and so the risk that we could really grow this carry out bigger than what it currently is real. And so you just fixate on that and you think, my God, these prices are never going to go higher again. We're just going to go lower. And that it could happen, it may be true, but I don't think everyone's going to be in unanimous agreement that needs to happen when it does. I think that we're going to get much more 50-50. We're going to be from an overbought territory, and people are going to be starting to get bulled up before it rolls over one last time. So I think we're closer to a bottom than we are than not, and I think we need to be really, really patient with what to do. So new crop wheat, where are we with it? Well, we've had the floor set here at $6 for a while. I don't see any reason to change that. We have this upside bought back in, so we can capture the higher prices if and when they come. New crop looks worse than the old crop that I just showed you, but nevertheless, it's still pretty much the same position, right? You just want to be long up above this area. And then once we, if we violate it and we come back down here into this area, then I think we're just going to be looking for another leg lower, and we'll be glad we have the puts on when we get there. So your risk is still down, right? I'm a little more optimistic and a little more cautious about taking new downward protection positions here, but nevertheless, if you have bushels, you have downside risk. So it's okay to put puts on either at $6, $5.90, $5.80. It's okay to do that and have it rip higher, because all you have to do is move those up and you'll capture that move up anyway. So you're not leaving anything on the table other than the premium that you pay in order to get into those positions. So if you want to talk about that, let us know. We're happy to have those conversations. and help you be positioned for where we're at. But we've been defensive of the $6 level. We should have been more defensive at 7, but we are where we are, and you got to trade from that level. So $6 is our floor, and we're really looking for an opportunity to bring it higher, but we just haven't gotten it yet. So we'll wait and see what happens later for the rest of this week. That's what I've got for you today. Tomorrow is Tuesday. We'll be back with you on Wednesday unless the market conditions warrant it. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a terrific day. We'll talk to you Wednesday. See ya.